Thanks for being here with me today. How are you?
Good. How are you doing?
Good, good. So we're here today to talk about something that is kind of a creative financing option. I would classify it as for homeowners and investors who already own property and they're looking to buy more property. So our topic today is leveraging equity, how to come up with a down payment on a new property without basically taking cash out, using cash that you already have in properties that you own.
Yep.
So I wanted to get started by talking about home equity lines of credit. So for our viewers, can you kind of explain what a home equity line of credit is and how it can work for them?
Yeah, absolutely. So it is just that, a line of credit based on the amount of equity or value in your home. If you bought your home and put 20% down, you have at least 20% equity in your home, most likely more because homes are appreciating so quickly right now. So you could pull out a line of credit and use that money for a down payment on another investment property or a second home. The nice thing about home equity lines of credit is that you're only having to pay back the money you use. So it's not a check going into your account necessarily, unless you choose it. So I know, for example, lots of banks will do home equity lines of credit. I actually do not do them because we're not a depository institution, but I've got somebody over at First Citizens I refer people to. And I was looking at some of her products today with HELOCs, home equity line of credit, and she has options ranging from 7 years to 20 years. So you can really have the monthly payment that you want. And of course, there's no prepayment penalty, so you can make double payments if you'd like, but at least the minimum required payment is low. She also has an interest-only option that's really nice for people. So the home equity line of credit is great. Oftentimes, the interest rate on it can vary throughout having the loan, almost like an adjustable rate mortgage. Because I like to fixed rate. I'm just a little bit more safer and comfortable feeling in that. So
Right.
say if you're not comfortable with that, then we should talk about doing a cash out refinance.
Okay. Now, one thing to get straight with a home equity line of credit or HELOC is that it does have to be your primary residence, correct?
Yeah, that is correct.
Okay.
I think that there were some small credit unions that would do them on investment properties, but I have not been able to find any anymore
Got
that are
it.
doing. So it's typically your primary.
Okay, but you can use, like, for example, my house that I live in, that is my primary residence. I could take a HELOC against that property, take the line of credit, and I could apply that line of credit towards a down payment on an investment property, right?
Absolutely. Yep. Yeah.
Okay.
And here too, you don't have to own your primary home free and clear. You can have a mortgage on it still and still do a home equity line of credit.
Right. You just have to have enough equity in the property, and at least 20%, you would say, in, or 80% loan to value, right? But
Yeah.
20% that you've put down or that you have accumulated in the property.
Right. And so if it's a primary, a lot of times people will put 3 or 5% down on a conventional loan. Um, to do a cash out refi rather than just a regular rate term refi, you do typically need to have 20% equity in the home.
Okay.
Yeah.
So that's a HELOC. That's a home equity line of credit. I have a YouTube video on my YouTube channel that talks a little bit more about it. As Sarah mentioned, Sarah and Integrity Home Mortgage, they don't do HELOCs, but they can refer you to someone great who does. Um, However, if okay, Sarah, so if someone took a HELOC on their primary to buy a investment property, could you help them with that purchase?
Yeah, absolutely. So actually, it's good to talk to me first before you go and talk about the home equity line of credit, because I can be there to answer some questions or tell you which questions to ask the bank. Um, and then that way I can see the final HELOC statement, add that to your file so we know that, okay, we have this monthly payment being added into. So
Right, right.
prices before closing because it's not going to report to your credit immediately. So you
Yeah, okay.
have to tell us. But yeah, absolutely. I have somebody right now and I'm walking her through every step of the way. I'm on the emails with the bank. So I'm happy to do that. Yeah,
Right. So in other words, you can still, if you're watching this, you can still use Sarah to finance the loan for your, let's say it's an investment property, but, and you don't have to use the bank who does the HELOC. That's just to open up basically the deposit for the property.
exactly. Yeah.
Yeah, okay, that's good to know. All right, so let's talk about cash out refis because I think this might be a little more relevant for, I know you and I have some clients that we work together on who are investors and they're building their real estate investment portfolio. And so we've been talking about some of them and trying to come up with options for them to leverage equity to put a down payment on their next property. So what is a cash out refi and how can an investor who already owns property use it?
Yeah. So a cash out refi is really similar to a regular rate term refi. The difference being that you get to cash out, you get to pull some of the value out, and you get the check at closing. So if you have 20% equity in your primary home and you want to pull some equity out for a down payment, you're more than welcome to do that. It is important to remember that that's a new mortgage, so you have to still qualify for it, right? So if you bought it and your rate was 3%, now they're no longer 3%. We have to make sure that you still qualify with updated interest rates, market rates, everything like that.
Right.
But yeah, you can use that money immediately on another property for the down payment. We would just need to show the documentation, but typically we would already have it because I would do the cash out refi and then I would do the financing for the investment property. Another good thing about cash out refis, I think they're a little bit simpler in my mind, but you can cash out on an investment property, a second home, a primary home, it does not matter. And you can really use that money however you please. A down payment is a really smart way to do it. With that said, if you bought a home and your rate was 3% a few years ago,
Mm-hmm.
no longer 3%. So your monthly payment's going to go up. And sure, it's going to go up some, but it's also affording you the ability to buy essentially a business that's going to make money for you.
Right.
No, yes, that monthly payment's going to go up, but it's worth it to start building this wealth, building that portfolio. And then in the future, you don't have to cash out refi that one again, or you can use something else in your portfolio to leverage equity.
Gotcha. Yeah, it's I think earlier we were saying, well, if someone purchased an investment property, if they're watching this and like, well, I purchased my investment property last year, and I financed it, and I had a rate of, I don't know, 7% interest rate. And then this year, obviously, in a lot of scenarios, and that's why you come talk to me is for, hey, what's my property worth now? But
Right.
a lot of homes and properties are gaining value daily. So something you bought last July might be worth enough today, or maybe in the next 12 months from now, for you to cash out and refinance to leverage that equity. But I guess something to consider, Sarah, is so the rate last year, let's say it was 7% as an example.
Mm.
And then right now, as an example, let's say that the investment interest rate is closer to 8.5%.
Okay.
Is it worth an investor doing the cash out refi right now, in your opinion?
I think they would have to look at what their cash flow is each month on that property. And then they need to talk to you to see what that property is valued at now. Because
Mhm.
I would definitely not write it off for a point and a half difference in rate. I
Mhm.
think it could be a really lucrative idea. Especially, we've talked about this before, but especially where we have options for long-term and short-term rentals.
Right, right. Yeah, well, it's certainly something to look into. So if you own an investment property and you're thinking about purchasing another property, definitely reach out to me or Sarah, and we can help walk you through the process. Even if you're not in one of the states or markets that we work in, I have access to tools that allow me to look at comps at any property anywhere in the United States. So I can still see a pretty solid idea of current market value. But as far as actually being able to facilitate the loan for you, Sarah, you're licensed in North Carolina and South Carolina, correct?
In Virginia, yeah.
And Virginia, that's right. I don't know why I left that off.
Loan officers in a lot of states, so I can always link you up with somebody. The guidelines for cash out refis are pretty similar, so I can still take a look for you if you're, thinking of North Carolina or Tennessee, whatever that might look like.
Right, right. Okay, that's good to know.
Yeah.
Are there any other products that we haven't mentioned or any other ways to leverage equity that someone may have in a property that they own?
Well, one thing I would say, it's not so much equity, but for the investors who have financed 10 properties,
Mhm.
conventional Fannie Mae and Freddie Mac won't let you have another one. We do have options. Or for the investors who, they file their taxes each year, they take advantage of those write-offs, and maybe they don't show a big income, so their debt to income ratios are too high to finance an property. We do have a no income doc investor loan that's really easy and a great product. You pay for convenience, so the rate can be a little bit higher than a
Right.
conventional loan. But for people who are really cash flowing, the rate is less of a concern.
Mm-hmm. Yeah, I think we've done that for a few clients, haven't we?
We have, yeah, and we actually qualify them based on what the appraiser says the property is going to rent for, and that can be short term or long term, typically.
Yeah. So that's a great option. Like Sarah said, if your DTI, so if your DTI is too high, or if you've done 10 investment properties conventional already.
Yeah,
Okay.
it's a
Cool.
really, really great product, and I actually have 3 investors for it, so we are able to shop through them.
Yeah. Yeah, it is a great product. And especially in the markets that we typically work in, because we have a lot of lucrative short-term rentals, and our long-term rental rates are still going up, which is great.
Yeah, absolutely. There's no shortage of it here, of the need. So
Yeah.
definitely, if anyone has any questions, let me know. If you've been told by another lender you don't qualify for an investment property, please reach out. We've got some really creative things that we can talk about and look into, for you specifically.
Yeah. And lastly, if someone has, cash on hand and they're trying to decide where to invest it next. So do I put it in a property? Do I put it in the stock market? Do I put it in, an IRA or some sort of savings account? Do I invest in a business? Like Sarah, I didn't prepare you with this question, but I want your opinion. So why is property such a good investment right now? From your
I
perspective as a lender, I know my perspective as a broker.
and we're probably a little bit biased to this because we see it, but it's because we see it every day and we see the appreciation happening. I've grown up in Wilmington. The home prices are wildly higher than what they were. That's only continue. The cost of waiting is so much higher than the cost of buying right now. And
Mhm.
that's why it's such a safe investment. We're not seeing people lose their money in a home. Um,
Right.
and work with a lender that you trust, work with somebody local who can make sure that you're not getting in over your head. Just because you're pre-approved for it doesn't mean it's a good idea.
Exactly.
Yeah, we can look at all of that. But I would say it's the safest investment you can make.
Mhm. I agree with that. And yeah, maybe we are a little bit biased, but as far as the value of properties, I think we're going to continue to see property values going up and
Yeah,
increasing over the next 5 to 10 years. And especially on the North Carolina coast, which is what we're talking about. But North Carolina, South Carolina, Georgia, like all of this whole southeastern corridor, people want to be here and people are still moving here. So you definitely
Yeah,
have a great opportunity to invest now and see a return on your money. And you don't have to pay cash. You have a lender right here who can help finance the next transaction for you. So anything we left out, Sarah? Anything you
yeah.
want to
I feel like there's a little bit of fear around short-term rentals right now. As far as specifically I haven't heard it so much with VRBO, but Airbnb. Just rest assured that there will always be another short-term rental company. That's Airbnb is not the only one. There's so many out there. People are making tons of money and very quickly. A close friend of mine just bought a condo in Surf City, and within a month of owning it, had it booked at 70% capacity. And she had redone all of it. Like, I mean, she's already cashed profit. So essentially she gets a paid for beach house.
Right, right. Yeah, I think that this year we're seeing headlines that short-term rental income compared to last year or the year before has declined, but that's kind of to be expected because A, 2021 was still COVID, and B, 2022 was, sort of a weird summer and high season. Like
Yeah,
people weren't quite traveling as much. So the short-term market is going to come back on all of our islands, on the North Carolina coast. Even if it's dipped a little bit this summer, you're not going to go wrong owning a property on the beach in North or South Carolina.
absolutely.
Yeah.
Yeah.
All right, Sarah. Well, thank you so much for being here with me today.
Thank you.
And I think we gave our viewers some really good information. So if you guys have any questions, I will post my information and Sarah's information in the notes. And please don't hesitate to reach out. There's no question that's asked too soon or no question that is too elementary for us. So we look forward to talking to you.
Absolutely. Thank you, Margot. Have a good day.
Thanks, Sarah. Bye.
Bye.